So today we are going to address a very debated topic around cash value life insurance, which is how to maximize the cash value, but specifically when it has to do with infinite banking. Our company, IBC Global, represents insurance business concepts as we discuss a variety of different concepts in the insurance business, specifically referring to whole life insurance and how to maximize the cash value. Whether the concept is cash accumulation, retirement planning, business planning, being SERPs, non-qualified deferred comp plans, whatever it might be. We go over a number of concepts specifically around whole life insurance, and the idea of the banking concept is one of them. Now, with that said, around the idea of the banking concept, a heavily debated topic and where so many consumers have vented so much frustration just over the years is around the cash value. But the number one objection that I have heard for years is, I am interested in the maximum cash value. I do not care about the death benefit. This is exactly what consumers express. How do I maximize the cash value? And then in the infinite banking world, what people often hear is, well, this isn't about maximum cash value. This is not about maximizing the internal rate of return. It's about much more. It's about taking control of the banking function in your life, and you can use a dividend-paying whole life insurance policy to do that, because you can. But the thing is, when it comes to a high cash value life insurance policy, if I want to practice the banking function or not, why not maximize the cash value first? That has always been our number one go-to, regardless of what concept someone is practicing. How do I maximize the cash value just like banks do, just like corporations do, just like the wealthy do? Why do I have to have something different if I want to practice this? So, not about the cash value. I should use a small to medium-sized company with a little bit higher base premium than I could typically go. So if I can lower the base premium, which reduces, the higher the base premium is, that reduces the cash value up front, commits me to a larger amount as a consumer, and it does not maximize the cash value. So if my goal is maximum cash value, and I'm being recommended to go with a small to medium-sized company that has not provided any proof of performance in the past, and go with a higher base premium, which sacrifices upfront cash value no matter how you spin it, the translation, being in the industry, is this: don't look at the cash value because it impacts my commission. Speaking completely straight, that is my opinion on it. Whether you like my opinion or not, that's my opinion on it. But at the end of the day, when you look at cash value life insurance products, regardless of what your goal is with the concept, what concepts you want to practice, small to medium-sized companies, high base premiums, do not give you maximum cash value. When you look at the data, which if you've watched any of our videos, you know that. So here's my encouragement before we move on to some data, is anytime you're interested in a whole life insurance policy, specifically for maximum cash value, you've got to remove this. Our company, Insurance Business Concepts, works with engineers, IT professionals, data analysts more than anyone else, very technical-minded individuals. When we work with those individuals, what I found is if you're going to share a story or something with them, they appreciate it, but they don't care. They're very data-driven. What do the numbers look like? Is everything optimized? And then they're going to make their decision based on the numbers. And this is often why engineers are very good at what they do. They're very focused on the transaction, making sure things are systematically in place. And I'm not going to get into what an engineer does because they can explain it better than me. They don't put emotion into their decision-making process. It's all factual, it's data. So whenever you're looking at a whole life insurance policy designed for maximum cash value, my encouragement would be to do the exact same thing. Always dig into it. Remove emotion from the decision when it comes to numbers, because at the end of the day, it is your money going into the product. You have to be careful here. Getting into some data. When we work with banks, so our largest client is a bank, right? They're between 7 to 800 million in assets. That's the size of their bank, not mega bank like Bank of America or anything like that. But when I first had the privilege to meet with them to really present high cash value life insurance as a BOLI product, I met with the CFO and an examiner there. So if you don't know what an examiner is, very, very technical individual. His name's Mark. He's a really nice guy, but with numbers, like you're not going to pull anything over him. I don't care who you are. It's not going to happen. But you've got to know your stuff going in there. If I go in there and try to use some kind of pitch as far as using a small to medium-sized company or go with a higher base premium because you'll have more money long-term, I'm going to get thrown out of that boardroom so quickly. They're going to go with a competitor. They're not going to do it. They're not. Like, it's not going to happen. I know that going into it. Everyone knows it too. But with these guys, they have maximum cash value up front. Yet over here, we hear and see different things. Like, come on. Like, if we want to copy what the wealthy and corporations are doing, see exactly what they do, and then emulate it to the closest degree possible. Why I say like that, not exact degree, or not copy it exact, is you and I, individuals, cannot acquire what banks have. Bank-owned life insurance is a different product that is available to the general public and even small to medium-sized businesses. When you look at tax and estate planning attorneys that know cash value life insurance in and out, they know how a policy should be set up and they will make that recommendation. You know, there's a couple we work with. I admire them very, very much. Just they're in business, they're younger than me, and I've learned a ton from them. But when I met with them, they were interested in cash value life insurance. They pulled an attorney in just to qualify me, to vet me, if you could call it that. And this attorney knew cash value life insurance better than most agents I know. I was extremely impressed, and she was really defending them, so that if you ever want to hear the story, at first it was kind of like, whoa, I'm on your side. But it worked out very, very well. We actually hired her. We've had her on some podcasts. She's one of my good friends. I like to refer to her as well. But she knows how cash value products should be set up, uses it in her international tax planning, maximum cash value. Try and pull something over, like it's not going to go well. Like they know what to look for. They know their stuff inside and out. When you look at actuaries, right? Scott Witt is one of the top actuaries I know, knows cash value life insurance. That is his thing. He knows it inside out. The inside joke with him and his fellow actuaries when it comes to high cash value life insurance policies is he would say blended policies with term riders, minimum premiums, maximum cash accumulation were the actuary's choice. He's actually discussed policies where he's seen strong internal rates of return, disclose the exact numbers. You have to reach out to him if you actually want to see the numbers or hear about them from him. But he's provided proof of performance. One of the few people I know, because we dig into historical performance, he does as well. But here's what all three of those have in common. Company selection, performance analysis is what they look at. This is exactly what the wealthy, exactly what corporations do. Company selection, performance analysis. Specifically, what companies have a track record of delivering the strongest cash values to consumers, regardless if I want to practice the banking concept or not. I just want maximum cash value. That's my goal. And then I intend to use the policy however I intend to use it. What companies have delivered the strongest cash values? MassMutual, Guardian, New York Life, and Northwestern Mutual. In particular, when the policies are designed properly. When they're not designed properly, it's a different story. Performance analysis. What do these guys look at? These guys, guess where their eyes went straight to? What's the guaranteed rates? What do the guarantees look like? Internal rate of return. You know, when I met with the bank, the CFO, I was actually asking him questions because I wanted to see how much research he had done or what our competitors, people we were up against, had educated him on. And I asked him, hey, when you looked at the illustration, did you notice that the internal rate of return went down each year? Even though the crediting rate advertised on the illustration was the same, that didn't change? He immediately went, yeah, I did notice that. Like, why are the returns going down on our money? Well, the reason why is how that BOLI product works is you've got an increasing insurance expense with a constant rate of return associated with it. So what happens is when those expenses come up, because the return's not going up with it, they actually gradually come down. They were always cash positive and they were very attracted to it still, but that was something he wanted more information on. But that's the stuff they look at. He was interested in that. The break-even point, upfront cash value. Individuals, wealthy couples, opportunity cost. That is what they value more than anything else. Top companies, maximum cash value. Like that is where people's interests are. at the end of the day. So we talk about data all the time, right? Our company, IBC Global, having historical performance on cash value life insurance policies. If you have a policy with us, you've seen that data, you have access to the full data in our client user package. If not, I'm going to touch on some of it. So this is actually from a Blease report, which anyone can search right online for the full report. We just took the data here, simplified it, and I categorized it the way I wanted to. So we have a 20-year study here. It's a little dated. We've got some more, but this is based on a 45-year-old male, $250,000 policy. It's not an apples-to-apples comparison, meaning this does not show policies where the individual paid the same dollar amount in with the products designed in the exact same way, which would be an apples-to-apples comparison. But what it does show is the actual cash value, the actual IRR. The full Blease report actually shows what was illustrated, then compared to what actually happened. But here we go. What do you notice? I'm going to draw a red line here. And with that red line, what do you notice above it? Company selection. Sound familiar? There's your internal rates of return. The only companies I've seen consistently deliver IRRs of 4% or greater have been these four. Now, with that said, if I'm going to see other companies making moves, it would be these guys. Just for full transparency, they've got a good business model, and it seems like they do know what they're doing. They made a dedicated effort toward whole life insurance. Haven't seen the 4% IRR yet, but I think that we will in the near future. For full transparency, again, that's my opinion. So there is a historical performance report. Now, personally, I like the independent policies. Side-by-side comparison, properly designed, fully transparent. So to look at some examples here, which we've got examples from different time periods. Here's a policy issued in 1980 on a 50-year-old male. This study here was a 10-pay policy with MassMutual. Is based on actual performance. On the far right, I should provide a little bit more detail to this. This is available to the public as well. Annual IRR, and then the dividend interest rate. So we always talk about the dividend rate being a gross rate that's credited after the company's insurance expenses, mortality charges, all that good stuff. And this policy also happened to live through a very attractive dividend interest rate period with double-digit dividends. However, you know what that happened during that period of time? Interest rates were much higher than those dividend interest rates were. But again, this is based on the actual cash value performance. And this one actually runs, I've got to update this through 2015. The IRR through 2015 was about the average IRR, that's the annual, but what it averaged out over this period of time was 6.19%. However, as the years have passed, as we run this study through 2021, this individual is older now, he's in his 90s. The actual IRR is closer to 5.6, 5.7%. I've got to run the exact, but as you grow older, that IRR will gradually come down, as it has been, but has still produced a phenomenal cash value. Here's a New York Life policy where the IRR to date through 17 years, just over 4%. And then what we also ran was the projections moving forward. How we got the 4.07% is we took the individual's total payments each year, his total cash value based on a statement at the time, and that's where the 4.07% IRR came from. But this is the kind of stuff that has to be disclosed up front. Critical. No one wants to do that though, because it's the fear of, hey, if it doesn't deliver this, or if it's a small company where I can't get that information, not saying they don't have it, so I'm not disparaging small companies in any way, shape, or form, but if we can't get that information, it's like, where is it then? Like, we need that. So let's look at another policy here. Actually, let's look at this one. One more over. This was a policy we put in force right after I got married. And we've measured the performance each year. This is one of my favorite things to do when it comes to high cash value life insurance policies, seeing what was originally illustrated and then what actually happened as we track the performance year over year. So, original illustration, plan funding was $150 for 3 years, then then 125 for 3, and then 50K through policy year 10 for a total of $1,025,000 in. Now, the original illustration assumed a 7.1% dividend all the way through. Obviously, that hasn't happened. It would be nice, but it has not happened. So when we look at the actual performance, here we go. Starts out less in the first year because we backdated the policy, but typically what happens when you do that, second year, hit just about what was projected. However, dividend has come down a little bit. Now what I want to add is on the in-force illustration. So the in-force is from year 6 moving forward. This is based on what actually happened each year, years 1 through 6. How we obtain this data is each year I run an in-force illustration from him, but then what I'll also do is pull the annual statements. That's where I get the actual dividend from and the actual year-end cash value. This way we can track the real numbers, match it up with his online account to make sure, hey, is it performing as it should? I mentioned earlier we work with a lot of engineers, very technical-minded individuals. He's one of them, but I like him a lot. He's actually become a good friend. So dividend rate moving forward is 6%. We've got to track the performance year over year. We've got the annualized IRR. In our full historical performance study, we do disclose the average as well, as this will easily do north of 4%. It's getting close already, but very, very strong in terms of actual performance. And this is the data we look for, right? And these are minimum premium policies. If a policy is designed in that manner, we see it actually deliver. And this is the key objection. Like, this is people's pain point that they have where they are attracted to the idea of the banking concept, but then they do not get answers around how to maximize the cash value of a product. Or some weird objection is thrown at them, like it'll mech or something like that, or you can't pay into it for a long period of time. My thing is, just provide clarity to someone in the same manner you would want clarity provided to you. So, hope this video was helpful. If you're interested in a maximum cash value life insurance policy, feel free to reach out anytime. And as always, I hope this helps. Enjoy. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.